Guys, as promised last week, this is the part 2 of the S&P 500 manipulation or the stock market manipulation. And in this part, we are going to cover the rest of the strategies, okay, that we have not covered in the part 1. If you haven't watched the part 1 of this, the S&P 500 manipulation, then you can visit my channel page. So when you visit my channel page, then you will find this, the S&P 500 manipulation part 1 video here. And I have given the link to my channel page in the description of the video and also in the comment section. Guys, last week we have covered the circular trading, the pump and dump, and the poop and scoop. So let me quickly revise these three techniques. Circular trading. Circular trading is when the buyer and the seller, okay, they are either the friends, okay, or they are known to each other, and verbally they have agreed to manipulate the market. Means the buyer will buy and the seller will sell, and they will pump heavy volume in the market. When the market will see very heavy volume, then the market will follow a particular direction. Either it will move up or it will come down. When the retail traders, okay, like you and me, so when the retail traders, they will see that the market is it is surprisingly moving up heavily, or it is surprisingly coming down heavily, then it will create panic in the market. Okay, panic. So when there will be this the panic in the market, so panic will trigger, okay, a lot of trades. So people, some of the retail traders, okay, they would like to jump in, okay, into these trades, okay, because they want to make money. Some of the retail traders, okay, who will see that now there are losses, so they will try to exit their positions. Now this way, what will happen, that these the buyers and sellers, okay, because they are moving up or they are bringing down the market, okay, heavily, so they are simply executing the orders, okay, of the retail trader. Okay, because see, whatever money this buyer, for example, the buyer is going to buy or buyer is going to invest like $5 million, so seller will invest the same, okay, approximately the same quantity, like $5 million. Okay, and because this is the 5 million, okay, and 5 million, okay, this is a lot of money, particularly from two people. Okay, so this is going to drive the market, and this will also kill the retail traders. So in case of the retail traders, there will be panic buying, okay, and the panic exit, and this will particularly favor these two people, okay, who are involved in the circular trading, because they are not going to do this activity, okay, only for one day, but they will do it for, like, 2 days or 3 days, and thereafter, after 2 or 3 days, then they will sell, okay, everything. In that case, they will change the role. So buyer will become, okay, seller, and the seller will become buyer. And in the last, in the last video, means in the part 1 of this, the S&P 500 manipulation, or the S&P or this the stock market manipulation, I have told you that how they change their roles, okay, and how they make money. Not just money, okay, but they make a lot of money. Okay, then comes the pump and dump. So pump and dump, okay, again, it is a part of the circular trading where they are going to pump, okay, a lot of money. They are going to move the market up, or they are going to bring the market heavily down. Okay, okay, and then at one particular price, what will happen, that they will simply dump. Okay, they will simply dump, and again, and there will be a reversal in the market, a heavy reversal. So this way they are going to trap the retail traders, okay, when the market is moving up and in the reversal, and when the market is coming down and in the reversal. The third technique that we have seen is the poop and scoop. Okay, because see, the name is ugly and so is the technique. So what happens is that these the market manipulator, they spread the news in the market, some bad remarks, some bad news about a particular stock in the market. When the market see, okay, so I have told you, okay, what the news is and how the news is fabricated. Okay, so I have explained the news in the part 1 of this video. Sorry, part 1 of this the SP 500 manipulation video. So what happened is that these the market manipulators, okay, they spread the news about a particular stock, and the purpose of, okay, this kind of, the negative news is to bring down the stock. Okay, so like 20-30%, 50 or 60, 70, or maybe 80%. Okay, so once, so means they will keep on spreading this kind of false information, okay, through the news, okay, particularly through the news, and through all other mediums. So when the stock price, okay, it will come down heavily, okay, like 60, 70%, 40, 50%, means when the stock price, okay, when it hit the bottom, then these market manipulators, they will come into the picture, and then they are going to buy, and they will buy heavily. Okay, so what you will see, that almost within a day, okay, the stock is like 10 to 15% up within a day. Within a day, it is 10 to 15% up. Now see, 10 to 15%, okay, it doesn't look very much. So but if you see that, see, you are the retail trader, At most you can invest, you know, $50,000 or $100,000. So if you are investing $100,000 and if you are making 10%, then you are making $10,000 within a day profit. Okay, if you are investing only $10,000, this means that within a day you are going to make only $1,000. If you are investing, sorry, not you are, so what happens is that in case of the market manipulator, they will invest, okay, at least a million or 10 million, maybe 50 million, okay, or maybe 100 million, okay, in this means they want to buy this particular stock. So let's say market manipulators, they are going to invest $10 million. Okay, now the next day the stock will be up by 10 to 15%. This means that within a day they have made more than $1 million, $1 to $2 million within a day. Okay, they have made this much of money, and this is not the only money that they have made. Okay, they are also trading in the futures and options. Okay, and if this stock, so generally, okay, they manipulate the stock that has the options. So what will happen, that when they are spreading this the false news, then they are driving the stock. Okay, they are driving down the stock. They know that because the stock is going to collapse, so in that case what will happen, they will buy the puts and they will sell the calls. Okay, they will buy the puts and they will sell the calls, because the puts value, okay, it will increase, and the calls value, it will decrease, and eventually it will be zero. So they are going to make not just 1 to 2 million or not just 10 to 15%, rather in total they are going to make 30 to 40% profits within one day, and in order to make this 30 to 40% profit, okay, within one day, they are going to do, or they will do this kind of activity, okay, for continuously for 7 to 15 days, or for 2 to 3 weeks, or for a month, until and unless the price has hit the bottom that they want to. So these are the three techniques that we have discussed last week. Okay, and this was just a revision of these the three techniques. Again, let me tell you, okay, about the S&P 500. This is the S&P 500, and there are 504 components in the S&P 500 index. Okay, now I have told you last week that whatever happens, okay, in these five companies or in these 5 or 6 companies, okay, sorry, see the Apple, the weight of the Apple is 7%, weight of the Microsoft is almost 8%, oh, sorry, 6%, 7 and 6, 13. Weight of the Amazon is 3, 13 and 3, 16. Weight of the Tesla is 2, okay, 16 and 2, 18. Then the weight of the alphabet A, class A and class C, okay, so this is almost 3.5 or 3.6. So 18 and 3. So this is approximately 22%. So the weight of the top 5 companies, alphabet A and B, okay, this is the same company. So weight of the top 5 companies is 20 to 22%. So this means that whatever happens in these 5 companies, okay, most likely the S&P 500 is going to follow that particular direction. See, today is 27th of July 2022. Okay, this is Wednesday, 27th of July 2022, and this is the day when the Feds are going to raise the interest rates. Okay, now if you see that the top 5 components of the S&P 500 index, okay, or this is the SP 500 index. So if you see, Microsoft is 5% up, Amazon is 4.42% up, Tesla is 4.66% up. Okay, Alphabet A and C are almost 7% up. Apple is 1.84% up. So in total, if you see that these 5 companies, top 5 companies, okay, on an average, they are up by more than 4 to 5%. So as you have seen that the top 5 components of the S&P 500, okay, they are approximately 4% up, and this is the S&P 500. Okay, so if you see S&P 500, okay, currently this is plus 1.5% up, 1.5%. Okay, so again, okay, as I mentioned that the top 5 constituents or the weightage of the top 5 companies in the S&P 500 is 22%. Then the rest of this, the 78%, okay, it's because of other companies. This means that today the movement, okay, today is the day when the Feds are going to raise the interest rates. Okay, so we are anticipating 100 bps. Okay, as of now they have not disclosed, because this is still 12:45 p.m. okay, afternoon Eastern time US. So the Feds have not disclosed this the interest rates. It is 1.5% up, whereas the 22% the weightage of these companies, they are on an average they are 4% up. Okay, This means that the rest of the 78% companies, it means approximately 500 companies, 500 companies, okay, that constitute or that constitute 78%, okay. So they are trading, okay, on an average, and that is the reason when we calculate, okay, an average of these 504 companies or 505 companies, it comes out to be 1.5%. But you can clearly see that the top 5 constituents, the top 5 stocks, okay, the weightage is 22% and they are driving the market, and the market is moving up. Okay, so this is what I wanted to show you, that whatever happens in these the top 5 companies, okay, market movement of the market will be most likely it will be in that particular direction. Okay, so this today the average is 4%, okay, but the S&P 5% is 1.5% up. So this means that when the average will be 3% down, okay, means when these the top 5 companies, when these top 5 companies are 3% down or 4% down, then the S&P 5 then the S&P 500 will be 1.5% or 2% down. This means that whatever we have discussed here, okay, in terms of like circular trading, pump and poop and scoop, okay, this is the bad news, okay, or the good news, and then this is the circular trading, means that whenever the market manipulators they want to manipulate the S&P 500 index, okay, what they will do, they will try to manipulate the top 5 companies, okay. It includes Apple, Microsoft, Amazon, Tesla, and Alphabet. So they will try to manipulate top 5 companies or any of the top 5 companies. So the day when you see that just one company is like 10% up or the 12% up, then definitely, okay, there will be some impact on the S&P 500 index. Okay, so this way, okay, whenever you want to see if if there is a crazy movement in the S&P 500 index, okay, in that case you can clearly see this thing, okay, in these the top 5 companies, that how these top 5 companies are trading. Now we are going to talk about the rest of these, well-known these the manipulation techniques. So first comes the bear raiding. Okay, bear raiding and the stock bashing. Stock bashing or the bear raiding. Okay, this is almost the same thing, but bear raiding means the bears. Stock bashing, okay, it works for the bears and the bulls. Now the question is that what is this the bear raiding? So the bear raiding, okay, it means that there is a manipulator in the market. This manipulator, okay, he want to short sell a particular stock, okay, one or more than one stocks. So he want to short sell, okay, these the particular stocks. Now because he is going to short sell, so the question is that how is going to make money? He will make money only and only when the stock price it comes down. And when the stock price, okay, means the more the stock price comes down, more he is going to make money. This means what he is going to do, he will spread, okay, some kind of news, some kind of negative news, okay. So you can relate it to the poop and scoop, okay. So he is going to spread some kind of negative news in the market about the stock, because he has always means because he has already in this particularly in this the short position. So he want to drive down the market. He want this particular stock, okay. So he want this particular stock to come down, the value of the stock to come down, so that he can, so when he sees that now the stock has come down by 20, 30 or 40 or 50%, then he will exit his short positions, and he will make 40 to 50% profit. Okay, so he will spare some false news in the market, okay, number one. Number two, that he will short heavily. He will short heavily, and because of this, the heavy shorting, he will create, okay, some kind of panic in the market. So there will be panic selling in the market. Okay, when there will be panic selling, then more and more retail investors, okay, retail traders, they will sell. Secondly, he is also going to spread, some bad news in the market. And again, he's not going to short on the daily basis. Rather, he will short, okay, at some like lower high position, a lower high position. Okay, means the market, okay, market was coming down, okay, then it is moving up. Now it has formed a lower high here, and now he is going to spread, okay, this kind of news. He is going to short, and then the market will come down. Okay, so this is what the bear raiding is. Now what the stock bashing is. Stock bashing, okay, it can work for both bears or the bulls. Means there is a stock, okay, maybe a bad stock, or maybe an undervalued stock. Now this manipulator, okay, he want to raise or he want to increase the price of the stock. So what he will do, he will buy the stock, okay, at this the current price, okay, and then he will spread a news in the market that see this stock is undervalued and the upside of this stock is like 200% in 1 year, okay, or maybe 1000% in 2 years, means some kind of positive news about that particular stock. Now what will happen, because he has already invested like 1 2 or $10 million in this particular stock, he has already bought the stock at this the lowest, the lowest price. Now he is spreading some good news in the market, okay, on the daily basis for a few days, okay, or for 9 days. So more and more people will be interested to buy the stock. When the retail traders they buy the stock, then the price of the stock it will move up. It will move up, okay. Now when the price, when the price, okay, it hits some level, some upward level, means for example when the stock price is 20% up, 30% up, okay, or 40 50 60% up, then this market manipulator he is going to sell. He has bought here, he has bought here and he is going to sell here. When he will sell, then there will be, okay, then the stock price it will again it will come down, okay. This is how he is going to make money in this the upward movement, in the bull movement, okay. Now again, let me remind you that stock bashing, okay, it is generally or it is related to the to this the bear trading, okay, but we also see it for the bulls, okay. So this is how short and long, okay, this is how it works by spreading some kind of false news or some kind of extremely positive news about a company for many days. Now we are going to talk about the spoofing and the wash trading, okay. So the spoofing and the wash trading, okay, they are almost the same thing, okay. So just like the bear raiding and the stock bashing, okay, they are almost the same, but in stock bashing, okay, we also count the bulls. Spoofing and the wash trading, okay, this is another kind of this the manipulation technique. So what basically happens in the spoofing and the wash trading, this is really very interesting. And generally, okay, this the spoofing and the wash trading it happens almost every day, okay. So in one stock or the other, it happens every day, and the purpose is, let me show you, okay, how it works. So what happens is that you will see that these are the buy orders and these are the sell orders, okay. Buy orders and the sell orders, so quantity of these the buy orders and quantity of the sell orders. Now let's say there is a market manipulator, okay, this the okay, market manipulator. He want to manipulate the market. So what he will do? He is going to place false orders. Let's say he want to move up the price. Okay, so what he is going to do? He will place fake orders. Okay, he will place fake orders. Let me write it down. Fake orders. Now, what are these the fake orders? He will place the orders in a way so that these orders will never execute. The purpose of these orders is not to be executed. Rather, the purpose of these orders is it is simply to tell the retail traders that see there are like 5,000 quantities or 50,000 quantities or 5 million quantities, okay, in the buy side. So what will happen when the retail traders they will see that there so there are so there are thousands of these quantities in the buy side and there are only a few quantities in the sell side. So the logic in the stock market it says that whichever side has the maximum quantities, the market will move into that particular direction. Okay. Now because this market manipulator, okay, he has or he has placed fake orders, okay, that are not going to be executed. So this means that he has simply increased the volume in the buying side. So this volume is not the actually executed volume. This is the interested volume. Okay. Now the retail traders they will see that there is a lot of this the volume in the buying side. So they will involve. So they will now involve in buying. They will buy, but they are forgetting something that the volume that they are saying okay in this side heavily like 10,000 quantities or 100,000 quantities. This is fake. This is fake. Means see, I'm not saying that this kind of order, okay, it is placed by the system. No, there is the real money. There is the real money. Okay, there are these the real quantities, but these quantities are not going to get executed. These will never be executed. The only purpose of putting these quantities in the table, okay, is simply to give a direction to the market, is simply to convince the retail traders that see Okay, there are a lot of quantities. So for example, 90% quantities on the buying side and 10% quantity on the selling side. So this clearly indicates that the market is going to move up. Now the retail traders, okay, they will participate in buying. Market manipulator, he is not participating in the buying. Retail traders, okay, they are participating in the buying. This is the fake bull run. This is the fake bull run, because everything is fake, because the quantities, okay, orders that are placed here, they are fake. They are not going to get executed. Now there comes one more thing, because okay, in order to move up the price, the market manipulator, okay, he has to place the order, okay, near to the current market price. But what he will do, that he is trading actively. So let's say he has placed an order of, like, 5,000 quantities, okay, and the current market price is $100. So he is going to place a buy order at $99, okay, or maybe $98. Now, as soon as, so he has placed his order in a way that as soon as the market price comes down by like 99.50 or 99.10 or 99.05, his order will be cancelled, or his order will be made, or his order will be modified. So his order will always be like $1 or $2 behind the current market price. Okay, if he is on the buy side. If he is on the selling side, if he is on the seller side, then his order will be almost, his order will or his price will always be $1 to $2 up from the current market price, because the market is expected to come down. And his order, okay, his quantities and his order will be modifying, very very frequently, when there will be, frequent changes in the price. So this is how he is going to move up the price without executing even a single quantity, without even investing, $1 in the market. It will all be the blessings from the retail traders. Retail traders, okay, they do not know how to trade. Okay, mostly they, so you can say like 99 or 98% retail traders, they do not know how to trade. And 70 to 80 or more than 80% retail traders, they do not know what the technical indicators are. Okay, and they trade through the sentiments, they trade through assumptions. So as soon as they see market is moving up, then there will be panic buying. Okay, when they see that the market is coming down, then there comes the panic selling. And this is how the market manipulators, they make money. So this is what the spoofing is, and this is what the wash trading is. Now the question is that how to identify these fake orders. In order to identify these fake orders, what you need to see, first of all, okay, you will see that either side, either the buying side or the selling side, okay, they have, means either side has, very heavy volume. Means, see, whenever you see that both sides, okay, they have very heavy volume, okay, so this is not the case. What we are looking for is that only one side, either the buying side or the selling side, so only one side must have a very very heavy volume. So you can say like a ratio of 80 to 20%, 70 to 30%, or 90 to 10%, this kind of ratio. Whenever you see, okay, this kind of ratio, then clearly, okay, there are the market manipulators, okay, and they are playing, and they want to play their game. They want to participate in the market in a way, so that they can initiate a fake run in the market, whether it's a bull run or the bear run. Okay, as simple as that. So that is the spoofing and the wash trading, and this is how you can identify them. And and there is one more thing, okay, in order to identify them. So you will notice that at least half an hour before the market closes, okay, at least half an hour, you will see that all of these, all of these orders, okay, means earlier the ratio was 90% to 10%. Now just before half an hour before the market was, when the market was about to close, so like half an hour before, now the ratio is 50 to 50%, 50% or 60-40% means the normal ratio. This means that these market manipulators, they have cancelled their orders. Okay, and that is the reason earlier it was 90%, 10%, and now this is 40-50%, okay, or 50 to 60%. That is the standard ratio. Okay, so this is again, okay, one thing. This is again a technique that you can use to identify these the market manipulators. Okay, again, see, we are talking about the SP 500, and we are doing, okay, some kind of, and we are doing this the SP 500 analysis, or you can say that we are talking about the S&P 500 index here. So when I say this, the spoofing, wash trading, bear trading, okay, poop and scoop, everything, this is related to the S&P 500. Okay, and do not forget that I told you that the top 5 companies, whatever manipulation these market manipulators they want to do, most likely or most probably they will do this kind of manipulations, particularly in the top 5 companies. Okay, Apple, Microsoft, Amazon, Tesla, Alphabet, A and C. So yes, there is one more thing. Okay, see, these are the top 5 companies, but also if you look into this, the market, okay, this the market valuation of these companies, then Apple is more than $2 trillion company. Okay, Microsoft is almost $1 trillion company. Okay, or 700 or $800 billion company. Okay, and so are the Amazon, and these are the companies. Now comes this the last manipulation technique. Okay, this is painting the tape or marking the close. Okay, marking the close. So painting the tape. Okay, so this is an old technique. Okay, that used to happen in the market. See, whenever the ticker, so the symbols that you are seeing AAPL, MSFT, okay, TSLA, AMZN, okay, ULH, etc. So these are the ticker. These are the tickers. Okay, and when you look into the market, then there are, these all of these companies, they have these are tickers. Okay, so earlier what used to happen, before the computers were, okay, introduced in the market, okay, or even after the computers, okay, for some time, so the tapes, okay, these the tickers. So tickers used to be printed. So these are tickers used to be printed, okay, on the physical paper. So when these stickers, okay, they used to be printed on the physical paper, then someone, okay, who is the friend of the market manipulator, okay, he can misprint a ticker. He can misprint a price. For example, let's say, okay, it was like 40, 50 years ago. Okay, so that used to happen. So let's say, okay, that time there is a stock, okay, X stock, and the stock price, okay, of this the X stock is like $50. $50. This is the real price of this the X stock. But because the market manipulator, okay, he has talked to his friend, okay, inside the market, okay, who is printing this the ticker. So he will say that rather than putting the value, okay, like 50, so mark this like 55. Okay, so print 55 on this the ticker tape. So his friend there, so he will simply print 55 in the ticker tray. Okay, and later he will say, okay, there was a mistake, then he will issue a new ticker. But by the time he says that there was a mistake or something, the market has seen that the price is 55. Now the price is 55. Okay, if it is very very low price, in that case people will jump in. In that case, okay, the market means the people in the market, okay, the retail traders, they would like to buy. Okay, or if this is at the highest level, then the people means the retail traders, they would like to sell. Okay, not just they, but more the means these are institutional investors also. So this is how we got the name painting the tape. So you are simply printing, okay, whatever number you want to print, okay, on that the ticker tape. So so that is the printing the tape. Then comes the close. Okay, marking the close. So marking the close is a kind of technique that happens, okay, in this computer world. So whenever market manipulators, okay, they want to show, they want to create some kind of this the fear in the market, or some kind of hope in the market, means panic buying or the panic selling. So what they are going to do, they will mark the close. Mark the close mean, let's say there is a stock, okay, and the stock price is currently, the stock is trading at $100, okay, and the stock is not moving up. Okay, and for last 3 or 4 hours stock is trading just around $100, and there is a news in the market that whenever the stock price it hits $105, whenever it hits $105, okay, then the stock price will fall. Now what these the market manipulators will do, they will, okay, immediately in last few minutes, okay, or in last 1 hour, they will move up this the stock price, okay, by like $4 or $5, and they will simply hit this to 105. Okay, so the closing, so by the time the stock market closes, the final closing price will be 105. Okay, and what will happen, that these the retail traders, When they see that the market is closing at 105 and tomorrow the stock price is it is going to fall, so they will sell. They will start selling immediately when the price move up, okay, after this the 100. When it is trying to move up, okay, and it is moving towards 105, so there will be panic selling, because the traders, okay, they have heard a news, some kind of news or fabricated news, that whenever the stock price it hits 105, then the stock market, so then the stock price will fall. Now they will close the stock exit. Now the market manipulators, they will close, they will mark the close at 105, means absolute 105. This is what we say, that the marking the close. So now willingly the market manipulators, they have marked the close at 105. Now the stock market, it has, after so it has a session after hours, and there is a session, pre-market. Now what will happen? Because the retail traders, okay, they cannot wait, they are impatient, okay, and they rely heavily on the news, and they know that 105 is the highest level, so they will start selling after market hours, okay, or the next day in the pre-market they will start selling. When they are selling, these the market manipulators, they are buying, okay, and immediately when the market opens, so what will happen? Either there will be a gap up open, okay, or there will be a flat open. Immediately upon open, the stock price, it will move up, it will cross 105, and it will move towards 110 or 115. This means that these retail traders, okay, who have sold, who have short sell at 105, they are going to lose a lot of money. In that case, okay, they will be forced, they will be compelled to exit their orders. So there will be panic selling among the retail traders, and then they will be buying, okay, means from the these are market manipulators, only because the market manipulators, okay, they have marked the close. They wanted the close price to be 105, and they have marked the close price, and this the close price, okay, it has acted as a catalyst in the market, because the retail traders, they thought that the stock price is going to fall. They will sell, so they were selling heavily. Because they were selling, market manipulators, they were buying, so they were buying, and the next day, okay, the stock price, okay, it has further moved up. Then there will be a new news in the market, that because the stock price, it has breached 105, so the new stock price, okay, or the new target price is $115 or $120. So these people, okay, these retail traders who have short sell, okay, earlier, and now they have exited their position, now they are hopeful that the market is going to hit $120. They will participate in the buying even before the stock price it hits $120. So like from $150 or $115 or $117, immediately the stock price, it will fall, okay. So the movement of the stock, it will be against the retail traders, okay. This is how we call it as, and this is why we call it as the painting the tape or marking the close. Also guys, there is one more thing, okay, that I want to share with you, that see, if you want to join my YouTube membership, okay, where you can see that my members, they are making very good returns. I have given the link in the description of the video. This is my YouTube channel page. Once this YouTube channel page opens, then you will find this the join button. When you click on the join button, then you will see a pop-up. In this pop-up, okay, you will get these two options. So there will be more options, okay, that will be added in the future. So as of now, there are these two options, okay. Only one midweek update per week, or all midweek updates in a week. And if you want to join all midweek updates per week, okay, then you can click on the all midweek updates per week, and through this you will get all of the midweek updates, okay, that I give to my members every week, whether there are 2, 3, 4 or 5, okay. So at most there will be up to 18 midweek updates in a month. So guys, you are welcome to join my YouTube membership. The link is in the description and in the comment section. Also, if you have not subscribed to this channel, then you can subscribe to this channel, okay, and you will get the weekly technical analysis, and also these kind of informative videos like the manipulation, okay, the outlook for this, the S&P 500, and other very informative videos related to the S&P 500 index.